how do you do business in Eastern Europe? So Eastern Europe is a big place. And Eastern Europe in those days included Russia, included Turkey, and included the what were called at the time the Visegrad countries, Czech, Slovakia, Poland, and Hungary. And I think there you've got three different types. Czech, Poland, Hungary, and Slovakia are they're closer to a European culture. So things that we would, I mean, they were, the Austro-Hungarian Empire was at the heart of Europe for so long. And I mean, it was, they would say they're more European than the UK. And so these are countries that are essentially European and reasonably familiar to us. Turkey is, I'd say, more similar to the Middle East. And there I'd spent a lot of time. I spent a lot of time in the Middle East as a child, and so I was reasonably comfortable doing business in Turkey. It's more of a haggling style of business. It's a relationship style of business. I think where personal relationships are so much more important. I think in the Europe, it's not to say personal relationships aren't important in Europe, but I'd say in Eastern Europe, it was more about business than about personal relationships. And then Russia is a completely different kettle of fish. Russia is a European country and it's also an Asian country. But I would say it's more of an Asian country than a European country. And I think, Russia is very, very different. And it has a very strong cultural history and heritage. But it's also got this very harsh environment, climatic environment, and it's obviously been through a very, very tough time. And so, doing business in Russia is a little bit tougher, than doing business in other parts of the world. It's still relationship driven. Who is super important, but it's the way of doing business in Russia I'd say, is alien from the way that we do business in a more Anglo-Saxon context, particularly when it comes to negotiating business deals. So I'll give you an example. We were actually mandated by the Central Bank of Russia in 1996 to raise $1 billion. At the time, it was really President Yeltsin wanted to demonstrate to the electorate that the West had faith in him and he wanted to get re-elected. And so he said, what better way of demonstrating that the West has faith in me than raising $1 billion? So at Merrill Lynch, we were mandated to raise $1 billion by the Russian central bank on the international markets. And there was this great cartoon in the Wall Street Journal, which was a Russian bear and an American bull. American bull was meant to be Merrill Lynch, sort of meeting and greeting and kind of. And so we launched this deal. It was in the press. I'd sold down the whole book, and the Russian banks became upset that a foreign bank had won this mandate, not one of them. And so they petitioned the central bank. And I got a call from the time the deputy governor of the central bank saying, "Kerim, I'm afraid we have to cancel the mandate." And I said, "Well, you can't. We're in the market. It's in the papers. I mean, it's sold. It's already done." He said, "Oh, I'm really sorry. We just have to cancel the mandate." The mandate's cancelled. And at that point, you realize actually that it's not a negotiation. It's a fait accompli. And I think there's less. Whereas we're reasonably ashamed to go back on something if once we've made a concession in a more traditional Western style of negotiating. In Russia, there's no shame. The deal isn't done until the very, very last minute. And anything you've said up until that point is somewhat irrelevant. So if you made concessions or you haven't made concessions, it's all up for grabs. It's not a question of incremental. It's almost a question of brinkmanship. And so it's a very, very different, and certainly, it's valid in its own way. But it's just a very different style of doing business. And then you get used to that. You get used to that, and you adjust how you do business going forward. But it's different, is what I would say.